What's up, you intelligent investors? It's your man Henry, back with some straight facts, and today I have 5 stocks that should do really well in October based on momentum and recent trends. Count them. Раз, два, три, четыре, пять. You guys didn't know я могу говорить по-русски? I'm going to give you guys a full analysis of each stock and some technical analysis as well. Like the smash button for Uncle Henry and let's jump into it. Number 1, we have Workhorse stock, and I haven't talked about this in a little bit. They have a catalyst which is coming up. As some of you know, it is the USPS contract. I thought the results would be out in late September, but now it's looking like it's going to be about mid to late October. It's important because once this happens, the stock could potentially skyrocket, and we should talk about how much this could be worth for this company. The contract was originally worth $6 billion total, but it could also be worth a lot more, and there's a lot of rumors going out. I want to go over the price action on Workhorse and what the charts actually say about this stock right now. So on September 24th, the stock bottomed at around $22 per share before skyrocketing, and I mean absolutely going off to a current $28 per share. That's because Workhorse surged 16% after President Donald J. Trump views Lordstown's EV pickup endurance at the White House. That's because Workhorse owns 10% equity stake in Lordstown Motors, which is targeted a 2021 launch of its electric pickup truck. Diamond Peak Holdings also jumped 12% on the news as the SPAC has previously announced that it will be merging with Lordstown Motors, bringing the company public once again after Workhorse spun off in 2019. I made a video on Diamond Peak. If you want to check it out right here, you can check that out. So this is a few reasons Workhorse is up, and for good reason. There really could be a contract that is made, and that would really heavily influence this stock. The chances are quite high, so this is an interesting stock to own. Despite all the hype from new investors, there might be a lot more upwards action if enthusiasm continues. If you like EV stocks, which I do, then it is one of the best names to add to the list of good stocks to hold. However, this is a growth stock and could come tumbling down 25% like it just did. However, long term, which I always preach, looks bright, and Cathie Wood, my favorite fund manager, who I am now reflecting the ARKH portfolio, has over 700,000 shares. This is an ARKQ, so when it comes to EVs, robotics, and innovation, ARK Invest sure is bullish on this name, especially right now. Let me know if you have Workhorse and what you think about it in the comment section below. On to the next one. Next, we have Peloton. I wish I took a picture, but I have seen the delivery trucks for this exercise equipment stock everywhere. The ticker is PTON. They make high-end bikes for home workouts. The stock just touched $100 on September 30th. In fact, you see, since the pandemic hit, this stock has been on a Virgin Galactic spaceship to the stars. Just 6 months ago, if you look at the chart, they have quadrupled. The bikes have a very sleek design, and Peloton currently has 1 million active subscribers. The total gym market is huge, and one statistic that I find interesting is 12% of new gym members join in January. So for their New Year's goal, people purchase memberships, but I think this year we will see a spike in Peloton's purchases instead. Another good statistic from the same article is that the average gym member earns $75,000 per year. That means people who are health conscious earn a little more money, hence they can afford Peloton. Next, we have Walgreens, ticker WBA. I like this stock because for the past 6 months, looking at the chart, it was about $45 per share, and now currently stands at $35 per share. It has a dividend yield of 5.29%. The 52-week range was between $33.88 and $64.50. That means this stock is currently trading near its lows. It also has earnings on October 15, which I think could do better than expected. However, we do have to talk about Amazon as competition. As you may know, pharmacy chains are facing increased competition from online giant Amazon and even telemedicine providers. They must adapt to thrive, and that's exactly what Walgreens is doing on a slow but sure basis. The company has put in motion a multi-point plan that'll provide nearly $2 billion in annual savings by 2022, improving front-end sales and increase repeat pharmacy customers, from who they generate tons of major profitable revenues from, so that is really important for their business. Though growth has been amazing for more than a decade, pharmacy chain Walgreens Boots Alliance is competing heavily and transforming its business quickly. One of the most exciting aspects of this transformation is Walgreens' partnership with VillageMD. The two companies are working together together to create an integrated primary care and pharmacy model co-located at Walgreens location that'll be perfect to treat customers with chronic illnesses. Up to 707, 2 zeros of these full-service doctor's offices should be up and running within the next 5 years. Walgreens is also relying on digitization, and I hope I pronounced that right, but it's basically the whole shift from physical stores to digital economy and digital products. Since our digital economy is increasing so quickly, this is a very good sign for Walgreens. This should help increase growth and help the stock keep growing and paying the juicy dividend of over 5%, which has been intact and growing for 44 years. There's also a broader theme at work here that folks may be overlooking, and that is an aging America. As baby boomers grow older, there's a growing likelihood they'll need maintenance therapies to improve or maintain their quality of life. This should provide a healthy base for Walgreens pharmacy segment for many years to come, so this is a safe stock with a lot of growth in the following years. Right now, investors can pick up shares of Walgreens Boots Alliance for around 7 times Wall Street's consensus earnings per share for 2021. Next, we have Microsoft. Investing in technology stocks needs to be a top priority, especially during the pandemic. Despite what you see on the internet, finance textbooks say low-risk stocks can often deliver tremendous high returns to investors over time. It's with these statistics in mind that I recommend investors take a look at Microsoft stock. The stock currently has a market cap of $1.6 trillion. Looking at the 6-month chart, Microsoft has been inching higher and higher from about $150 per share mark up to the current $211 per share mark. Microsoft is a technological powerhouse. Its Office software helps drive productivity for businesses around the whole world. Its Azure infrastructure platform powers many companies and cloud initiatives. I like cloud because it has a massive profit margin and is being adopted by companies very fast. And last, its Windows operating system continues to run the PC market. Add in popular Surface devices and LinkedIn professional social media network, and oh my goodness, there's just so many good things, including Xbox gaming console. I also wouldn't mind doing the technical charts for Microsoft and doing some projected sales numbers, so do let me know if you want that. And also, if you made it this far, don't forget to smash the like button for Uncle Henry. Microsoft is also a financial giant with annual net profits of more than $44 billion and $73 billion in net cash reserves. The tech giant has all this cash money that it needs to invest aggressively in new technologies while rewarding shareholders with stock buybacks. And there's just so many good things that Microsoft has going for it, including all that cash that I just talked about. Number 5 on my list, we have Virgin Galactic. We know space is the future, and this is a catalyst that I'm really excited for coming on October 22nd. Here's the article, and basically Virgin Galactic plans next to test their space flight on October 22nd. It might be a few days after, but what I see happening is Richard Branson is going to have some really good news in terms of what Virgin Galactic is up to, and we know that's going to be very important because everyone's basically waiting for Richard Branson to go up to space by himself. This stock is a long-term stock, and over the next 3 to 5 years, it's either going to be a 10x stock or it's going to stay flat and it's going to be a bad overall investment. I see the latter happening because of the strong management and team behind Virgin Galactic. They have hypersonic travel potential and commercial flights ahead, which could both be a huge revenue for the company and honestly just push the stock way higher than it is right now. The best entry point, in my opinion, is around $16 per share, but if things go well for the company, under $20 per share could still be very profitable. Now, it will take some time for this to materialize, but they have had 2 successful glide tests of Spaceship Two, so that is a good thing for the company. I'll do a follow-up video on this one in a week or 2 when we get closer to the catalyst date. Oh, and if you guys want 2 free stocks, then make sure you sign up for Webull. When you deposit $100 in your account, you get 2 free stocks worth up to $1,600, link in my description. As always, guys, make sure you do your own due diligence because you should not consider a YouTube video financial advice. This is just education and entertainment, and you shouldn't just buy these stocks without looking into them a little bit more yourself. That being said, it's been 30 days on my ArcH portfolio on Patreon, and I turned $10,000 into $10,475. So basically the $50 fee was well worth it, even though I didn't post there daily since I'm a long-term investor. For the month of October, I really beat the market by a whole lot because the S&P 500 and a lot of stocks, including Tesla, were down. I beat the stock market by multiple percentage points. I had an over 4.5% return, whereas the market, I think, was at a -% return for September. For the month of October, if you sign up and you are a new member, it will ask you to pay, but I will refund you the amount and let you enjoy the highest Patreon tier for October since my birthday is on Halloween on October 31st. So yes, you will have to pay, but I will refund you that money when you message me personally on Patreon in the middle of October, and you get to see exactly what I hold and how I beat ARK Invest for the month of September and absolutely smoked the S&P 500. If that isn't reason enough to join and trust Uncle Henry is super educated and knowledgeable in finance and investing, then I don't know who really is. If you guys found this video helpful, drop me a like and a subscribe, and I'll see you guys back for more videos in the month of October. I am super excited to have so much more content coming out for everyone. Oh, and be aggressive in learning, but be safe in investing. Give me that fist bump.
No one ever sees me, I'm losing every battle. No one ever sees me, I'm losing every battle. No one ever sees me,